Good morning and welcome to the Killik & Co market update. This week we've been looking at the proposed merger between Asda and Sainsbury's, which was announced last Saturday morning. And on Monday morning the stock of Sainsbury's opened up 20% and then it moved on to finish the trading day up about 14%. So good news there for holders of Sainsbury's shares. Now, as we know, over the last few years, supermarkets have had a very difficult time and there has been a huge amount of price competition. So at the moment these companies are very keen to do what they can to cut cost out of their businesses, and mergers are a very good way to do this. So that's why Sainsbury's is keen to merge with Asda. And just to illustrate what a tough time Sainsbury's has had over the last few years, have a look at this chart here which shows the profits of Sainsbury's over the last 6 years. So this shows the earnings per share, and as you can see it's very much a downward trend. Actually, Sainsbury's made a loss in 2014. That was their first loss in 10 years, and that followed a number of property write-downs that they had to make. But since then we haven't really seen much of a recovery, and it's still very clear that profits for Sainsbury's are very much declining. So it would be good for Sainsbury's if this deal with Asda was allowed to go through, but at the moment we don't yet know if it will be allowed to go through because MPs have raised concerns about the reduction in competition. Now this pie chart here shows the market share of various supermarkets in the UK. So as you can see, Tesco is still very much the leader, followed by Sainsbury's and Asda at number 2 and 3. Now if these two were allowed to merge, that would make them the largest supermarket in the UK. Now they have said that if they're allowed to merge, they will be reducing prices for consumers, but MPs are concerned that they will do this by forcing suppliers to cut their costs or cut their prices, and that would clearly be very bad for suppliers. So that's why MPs are opposing the deal, and at the moment, as I said, it is very hard to know whether this will be allowed to go through. So if you are a holder in Sainsbury's and you have been waiting some time for a chance to get out of this holding, then I think it would be a good idea to call your investment manager and talk through your options. And also on the subject of food, the Financial Times has just released its annual list of the 1,000 fastest growing companies in Europe. And this covers both private and listed businesses. And this year, Deliveroo, the food delivery company, has come in at number 1. And I think this is quite interesting because last year, HelloFresh was number 1. Now, HelloFresh is a business that delivers raw ingredients and recipes to people's homes, and then they have to cook the food themselves. So that did offer a degree of convenience to consumers. However, Deliveroo goes one step further and delivers the finished product. So I think the fact that Deliveroo is now number 1 shows that consumers have become more time poor and they are now more willing to pay for convenience. So I think this gives us an idea of where the nation is heading. Finally, we've been looking at Spotify's first results since they joined the stock exchange. These came out yesterday and they did get some negative press, and at points yesterday the stock was down about 10%, although it did finish the trading session down about 5.66%. And for us this is actually quite a good example of when investors and markets aren't particularly rational. So Spotify joined the stock exchange at the start of April, and on the first day the stock was trading at about $132. At the time the company issued guidance about its growth rates and its number of subscribers, and then over the course of the next month the stock did rise quite steadily, as you can see by this chart here. Then yesterday the company announced results. It said its guidance was still correct and still accurate. It reiterated that guidance, and yet the stock was down 10%. And for us that really shows that sometimes short-term moves in markets don't really make much sense, and that's why we tend to invest for the longer term. Now moving on to the week ahead, it's fairly quiet on the UK front because we do have a bank holiday on Monday, but there are a number of German companies reporting, notably Deutsche Post, Deutsche Telekom, Heidelberg Cement and Continental. That's it from us. Have a great weekend and we'll see you next Friday.